For some analysis on the major issues driving fixed income space, we're joined by Stephen Nash from FIIG Securities. And Stephen, can we start with the dollar? Where's it headed? We've seen it push through 106, 107. Could we see it get back through that record 110 mark?
Look, I think it really depends on what your view of the RBA is. I think the market's coming to the view that the arguments for further easing are dwindling all the time. Since the last easing, we've had a substantial recovery in terms of equity market sentiment. We've had the S&P up about 5%. We've had regional indicators, as we got yesterday, indicating a firming of regional growth. I think, however, that there are continued concerns in the Chinese economy about asset prices, but broadly we've had an improvement. So I think the market's already building in the probability that the RBA won't move. So even if that happens, I suppose there's still some upside left in the Aussie.
So fixed income says no move next week.
Look, the fixed income market has become increasingly questioned the recent rally in terms of possibility of easing. It's now coming to the view that there's a good chance that there won't be an easing. So I suppose the 3-year bonds have rallied quite considerably, but they've also weakened of late. So the market is a bit unsure, whereas before it was very sure that there would be a series of easings.
What about the reaction to yesterday in terms of we had that ABS data, we had that Chinese read?
Yeah.
Equities finished lower and that was a bit surprising. Lots of people left scratching their heads. Can you give us your take on those numbers and the reaction for fixed income to those?
Look, I think in terms of housing prices, there's been a lot of pessimists out there saying that there will be continued falls in housing prices. We don't expect that. And I think that the housing price story is just one of moderation going forward, with consumers deleveraging broadly. So we don't expect any collapse in housing prices, and I think that's broadly supportive for the equity market. I think the equity market yesterday had quite a bit of steam in it anyway, so it really didn't have much more to go after those releases.
And turning to the RBA again next week, I want to talk about what exactly it will be watching in terms of data points. Will the CPI be front and centre? I guess Europe will also be. What will it be honing in on?
Look, I think what's been happening in terms of the broad economic picture, particularly in the developed markets, is something that the RBA will take account of. I think the question is whether one more easing is required to neutralise rates, or whether it will just back off and not do that. I think the idea of a series of easings is really going out of the fixed income market right now. So it's really a question of whether they do this easing and finish off their neutralisation or not. And the market is questioning whether they'll do anything at the moment.
We remember what we heard last month when they chose to cut and they were concerned about the situation in Europe. Inflation wasn't such a concern.
Yeah.
What's happened since then, or not last month, the month before, 2 months space this time? What's happened since then that the RBA will be focusing in on, and how could its thinking have changed?
Look, I think the advent of the LTRO in Europe late last year, as we've been saying for a while, has really calmed markets significantly. The fear in the market was that there'd be some sort of a disaster scenario where the banking system would collapse. The LTRO has really taken that off the table. Expectations of another LTRO are coming up and have already moved, even in this month, from around 500 billion euro to about €1 trillion. So expectations are that the pressure is off bank funding, and that's a very big improvement from the previous month. I think that is important for the RBA. Also, in terms of the CPI, we've had a fairly neutral reading. I don't think that's really positive or negative at the moment, but the big improvement has been in global market conditions, I think.
And I want to talk about the savings rate and what's been happening with that lately. We've seen a lot of job losses. Is that starting to prop this up? Is it bolstering the rate?
Well, there seems to be continued release about cuts in the financial services industry. Also, there's discussion about job losses in other parts of the industrial structure, like car manufacturing. This discussion, I think, is going to force even further increases in the savings rate, so that doesn't bode well for credit growth going forward. So I imagine that there won't be any problem with housing prices as people are becoming less happy with borrowing at the moment.
And to the States, Stephen, we'll be hearing from Bernanke. What are you expecting to hear from him this evening, and will it support expectations of additional easing?
Well, the Fed has repeated several times that they're concerned that the unemployment rate is too high and that inflation is a little bit too low for them. So I imagine that they'll continue to push the case for further quantitative easing. The market, particularly the bond market, has been holding in on the expectation of further QE, even though the stock market's been rallying significantly in the last month. I think that's going to just be another theme that continues, and we'll get another instalment tonight.
Absolutely. Stephen Nash from FIIG Securities, thanks for your analysis today.
Thank you. Bye.